Hi, I'm Rod Stone from Stone Accounting and Business Advisory. Today we're going to continue our series of videos on cryptocurrencies, metaverses and NFTs, and what you need to do to satisfy the tax office requirements in preparation for you lodging your tax returns at 30 June in Australia. So if you want a foundation, go back to our previous video where we scratched the surface of what a digital currency is or a cryptocurrency is, and we also outlined the tax office's viewpoint on how they're treating cryptocurrency transactions. So today we're going to talk about record keeping and help you to understand what your obligations are and what you need to do to make sure that you're going to meet your tax obligations. So if you've invested in cryptocurrencies or you've had cryptocurrency transactions in the last 1 or 2 years, you might have noticed that in your MyGov account that the tax office put a little comment in there saying that they are aware that you've had cryptocurrency investments and that you must be aware of what your obligations are. That was the first indication to us that the tax office was starting to monitor the area and trying to get people to declare and self-assess their own cryptocurrency capital gains and capital losses. So the last video I talked about the difficulties in doing that because cryptocurrencies are not something that we buy for an amount and then we watch them go up or down and then we sell them. It's becoming more common for us to use cryptocurrencies to pay for daily things. So it's very difficult to satisfy the tax office requirements, but I'm going to go through the things that you need to do for this year. I believe that the tax office will change their stance, but for now their stance is that we need to do a capital gains tax calculation for every purchase and sale of cryptocurrency. So record keeping. You're going to have to put, or we're all going to have to put into our tax return a capital gain or a capital loss on all of our cryptocurrency transactions. The best way to do this is to look into your cryptocurrency wallet and see all the transactions that are in there. Cryptocurrencies are very transparent. We can see every single transaction. However, when you look into your cryptocurrency wallet and you look at your transactions, you might have purchased one NFT, but there might be several. There could be up to 10 different transactions in your wallet associated with that one purchase due to things like gas and network fees and things like that. So you can go through and you can start to put together all of your transactions from your cryptocurrency wallet, or you can start to build a portfolio where you track the specific purchases of cryptocurrencies, the specific sales, and start tracking the gains. For now, one of those two methods is going to be the best method. So then you're ready to hand over to your accountant all of your cryptocurrency transactions to make sure that your accountant has all the information they need to help you calculate the capital gain or capital loss on all the activity that you've had. That is going to be a very big job for your accountant this year, so you need to make it as easy as possible. If you don't do that and you can't keep track of all your transactions, then you are at risk of having an audit. The tax office is looking much more closely at this space. I believe that they've got a big team working on this and how to tax it in the future. But for now, they're the two ways that you can do it. We've actually created a portfolio template. If you want a copy of that to make it easier for you to keep track of your transactions and to make it nice and easy for your accountant and present that to them in the exact form that they would want it, please contact us. We can send you that template. Other than that, start to keep track of all the transactions that you're making because it's not going to be easy to do it at 30 June at the end of the year. There's still 5 months until the end of the year, and it's a very rapidly evolving space. I'm sure that people that are using cryptocurrency today for X number of transactions a week are going to be using it for more transactions next week and the week after and the month after that. So please start thinking about record keeping. If anyone wants a hand or they want a further explanation of what's required, please contact us. We'd prefer you to do it now rather than at 30 June when the job's much bigger than what it is today. So that's just record keeping. You can see that it's a big job. You can see there's a lot in there. The next videos, we're going to start to scratch the surface of metaverses. In future videos, we'll look at NFTs. We have a fair bit of knowledge about this. We've been participating in this space for a number of months now. So please stay tuned. There's a lot of useful information that we're going to disclose over the next few videos that's really important when it comes to taxation. So thank you and stay tuned. Thank you.